Please help me welcome Flora Wood, Vice President of Investor Relations and Sustainability from Altius Minerals Corporation, here for Fireside Chat.
Hi, Mary.
Hi, Flora. Great to see you.
You too.
All right. Welcome to the conference.
Thank you.
So for the audience here today, can you give us a brief overview of Altius and its business model as well as the company's strategy?
Absolutely. Thank you, Mary, and thank you to the conference because this is our first time here. So really happy to meet everybody here. It's been an exciting conference so far. Altius is an older company, so founded in '97, still run by the founder. And we would be compared to, say, Wheaton, who presented earlier, much smaller and diversified. So we have zero revenue from gold at this time, although that's not true of our NAV, which we'll get to. Our revenue is really split between base metals, so copper, nickel, potash, agriculture, iron ore, and renewables, being US wind and solar. And we have 10 operating mineral royalties and another 13 operating wind and solar royalties in the US. We've got about 4 projects in construction that should start contributing at the end of this year through to the end of next year. And we've got around 46 early stage royalties that, going back to your question on our business model, came from what we consider to be our core competency. We started as a project generation company, and these 46 royalties are generally coming from us doing the early stage geological work and then vending the project on typically to a junior in return for a royalty back to us, and often a portion of the equity as well. So we would have a junior equity portfolio that is around 15 stocks right now, ranges between 15 and 25, depending at what point we're at in the cycle.
Okay, excellent. And you mentioned that you guys are a diversified royalty company. I think probably the only mining royalty company with potash exposure within the portfolio. So can you tell us a little bit about what attracted you guys to the potash royalties that you own and what your thoughts are on the commodity outlook?
Yes, absolutely. So I have to take a step back to starting out as an exploration co, which I know a lot of us in the room, that's our business plan. When we started out in '97, that was the year that BRIEX happened. So it went from being what looked like extremely prospective to being a pretty extreme bear market scenario. And we quickly realized that as a junior, you're constantly having to raise equity. And we started to think about there's got to be a better way. What can we do that basically keeps us stable and covers overheads while we wait out times in the cycle? Because there are better times to be exploring and in different regions. And so we bought our first royalty in 2003. It ended up being on Voisey's Bay, and it fulfilled the business plan. It basically covered overhead. Overhead even now, 28 years later, is around $10 million a year in G&A. And that royalty really introduced us to the benefits of being a royalty company. And we started to look at what are the best attributes we could find. Well, they're long life. So we needed mine lives that typically went beyond what we could find in a precious metals company. And that brought us to potash. They're really the longest mine lives out there. So our royalties are on the 6 of the Nutrien mines and Mosaic's Esterhazy. So these are Canada's largest potash royalties. Canada's the largest potash supplier in the world, and these mine lives go out to 125 years. That's really what attracted us. And we first got involved at the end of 2013. We had been attempting to buy this portfolio of potash royalties that was bundled with thermal coal royalties from Sherritt for about 4 years. And each year we'd attempt to buy, we'd be turned down. Then Sherritt, in building Ambatavi, got into CapEx overruns and finally called us back. And so at the Christmas of 2013, I guess we closed in 2014, that's when those potash royalties came to us, along with thermal coal. And the thermal coal is another story, but the potash has kind of lived happily ever after. It's a 2.4% CAGR per year. So we got them in 2014, and the volumes have now almost doubled since the time we bought them.
Okay, nice. And in addition to potash, you guys also have some gold exposure, right? I think right now, even though you guys are a diversified royalty company, you have about 35% of your asset NAV in gold assets. Can you tell us a little bit more about that?
Yeah, that's an interesting one for sure. And you got the numbers exactly right. So we have a 1.5% NSR on the Silicon Gold royalty in Nevada. Operator is AngloGold Ashanti. Some of you probably know it. It's gone from 0 to 16 million ounces in a period of 3 years. And we acquired that royalty from basically acquiring another project generator, Callinan Royalties, whose at the time CEO had been our CEO's classmate in the original Memorial Geology class, and who basically consult with each other on due diligence for this whole 28-year period. So when we acquired Callinan, we acquired it for around 77 million. The vast majority of that was really the royalty on the 777 mine, Hudbay's mine, which closed in 22. Virtually no value was given to the Callinan project generation portfolio, but it's that portfolio that has the 1.5% NSR on Silicon.
Nice. And of course, there was a recent transaction involving that asset where Triple Flag bought Origin. And given Altius is a big equity holder in Origin, can you also, and you guys also, of course, own that royalty. What were your thoughts on the transaction, and what did you think of it?
Yeah, that was a real floor-setting transaction for us, in the sense that, like you say, we own just under 20% of Origin, so 19.6%, and we'd paid $14 million for our stake. The most of that had been in 24, when anybody who followed Origin might remember the stock had been moving up in sync with the Ermitaño royalty revenues, and also with Silicon's success as it was being drilled out. Now this acquisition basically will deliver around $73 million in purchase consideration to us for our stake, including $33 million in cash. And the real key with it is that this asset, their 1% consideration, around $370 million, the read-through to our 1.5% is it puts a value of $515 million on our royalty, which analysts were estimating to be worth around $220 million. So it's a very big move. We've been pretty open about the fact that we are a diversified royalty company. The Silicon royalty might trade better inside a precious metals royalty co. Haytham's point about the try to buy it at or below NAV and then see it trade at the Precious Metal Royalty Co. multiple is very much intact with our own thinking about that asset. So either if we keep it, it would add at spot gold prices somewhere like 70 million a year in revenue, so that's 1 times our existing revenue. And if we sell it, it's a very good value based on that Origin acquisition.
Very exciting. Can't wait to see what happens there.
Okay, good.
And are there any other hidden assets within your portfolio that you think investors aren't giving you credit for?
Yeah, there's a great one. There's one that we actually staked and drilled early in our project generation career. So that would be Kami in the Labrador Trough. And we drilled it in 2003. Our costs on Kami work out to about $2 million, and the analyst NAV on Kami is around $150 million. So the reason that Kami is worth so much is it's a 3% gross revenue royalty, and this is an iron ore deposit that would be around 9 million tons a year. It's in, the operator is Champion Iron. And at the end of 24, they did a deal with Nippon Steel, where Nippon Steel would invest $249 million up front, and then Nippon and its partner Sojist would double that once we get through feasibility study and prove out the metallurgy. So that would be the best example of next catalyst.
Excellent. And you guys also have a junior equities portfolio. Can you tell us a little bit more about that and what the strategy is on that front?
Yeah, so the one point I want to make on the junior equities portfolio, because we get a lot of questions around how much do you spend keeping that junior equities portfolio alive and your project generation every year. We spend somewhere between 2 and 3 million a year. So out of 10 million, it's a fairly significant chunk. But what Brian Dalton, our founder, would say is that think of that as the one thing you could never give up in the company, that is really the engine that generates these royalties, 46 of them, that could turn out to be another Kami or another Silicon. And so our team, there's 18 people, and it's split about half and half between technical and finance. And the technical is mainly geologists. We're still doing that same kind of early stage generation work, and it's absolutely core to us. We do treat that portfolio as kind of a source of monetization as well. So we have monetized more than we've put in our activity over the years, but really it's just the opportunities engine.
Yeah, sounds like a very successful model. And I think we've got probably around a minute left. So in this time, can you tell the audience why someone sitting here today should buy Altius stock?
Yeah, so I think the big reason is that for a mature royalties company, we still only have 46.3 million shares outstanding. We're doing around 60 to 65 million in revenue per year. So a royalty like Silicon and a royalty like Kami can still move the needle in a really meaningful way. We're not on a growth treadmill. You can have one opportunity that basically doubles your revenue.
Okay, excellent. Well, thank you very much, Flora.
Thank you.
Great to have you here.